Let's take a look at some Monero charts for the latest Brave New Coin article. So whenever possible, I like to compare like coins that are trying to achieve a specific goal to each other. In this case, privacy capabilities. All these coins have various privacy capabilities, arguably Monero the strongest among them. Now there's also Dash, Zcash, Decred, Grin, and Pivx, Dash, and Zcash, as well as DCR, use a optional privacy feature, whereas XMR is built in. I'm not sure about Grin, honestly. I think it's built in default as well, but not 100% on that. I need to do some research, but it does have privacy capabilities. It's marketed as a privacy coin. So just comparing all these, the first thing immediately to know is that for XMR and Grin, the daily transaction volume and active addresses cannot be determined because of the way the chains are privatized, but everything else we can compare. And in all categories except market cap, Monero is second, which isn't really that big of a deal. Again, this isn't like actionable. I just like to look at the landscape, see how we lay here based on coin to coin. It looks like Dash is clearly leading most of these categories. I don't know enough about Dash to know whether this is some inflation stuff going on. There's definitely some mixing on Dash, coin mixing, that may inflate some of these numbers. So again, it's not a one-to-one or perfect. It's just a quick check to say, like, why is Pivx have all these GitHub commits, Monero having strong GitHub commits and a strong market cap makes sense to me. Any coin needs baseline, they need development. If you look at Doge, where there's no development, you look at LTC, there's no development. These coins, from a fundamental perspective, are worrisome in a buying, investing sort of situation. Looking at Monero's difficulty and hash rate, Monero, more so than other coins, has aggressively tried to remove ASICs from the chain. They're also dealing with things like crypto jackers, crypto lockers, secret crypto miners. All this stuff affects the hash rate. And when they constantly change the algorithm a little bit, which is what they were doing for each of these successive hard forks, to try to kick off the ASICs every time. And eventually, they came back. Either this was crypto jacking or crypto mining software, malware type stuff. Eventually it goes away. And it looked like after this pre-April hard fork, like eventually everybody got the message where it was just too hard to keep up. But then they took it one step further in the November hard fork and said, we're going to switch the algorithm entirely. So instead of adjusting Crypto Night slightly every hard fork, we're going to create this new algorithm, RandomX, which makes CPU mining viable over ASIC mining. And it looks like hash rate is hitting all-time highs, but a RandomX hash isn't equivalent to a Crypto Night hash. And I'm pretty sure the RandomX hashes take more work. So it looks like there's more work being done in more hash rate, when in actuality, you can't really compare the two directly. One thing that was striking to me was the consolidation of mining pools here. 59% between two pools, 70-something% between three pools, 76%, which is problematic from a decentralization perspective, no matter how you slice it. When this is happening with Bitcoin, there were riots on the RBTC or our Bitcoin Reddit subreddit streets about, slush pool having X% or whatever. So this is definitely an issue going forward that can be fixed and mitigated for a 51% attack. And from a price perspective, most people don't even care about this. Look at ETC, it's up over 100% and it was 51% attacked in January 2019 successfully. So in general, people really don't care about this stuff right now. But especially the Monero community, who's like the crypto amongst the crypto people, the crypto people's crypto people, if you will. I'm surprised there isn't more like outrage or outcry against people mining on these pools. Maybe there is, and I'm just not seeing it. There's definitely posts on the Manero subreddit talking about this, but I'm surprised I was the first one, at least that I noticed, to like bring this up and say there's a bit of an issue here, especially post RandomX. RandomX to me was like supposed to solve all these issues around hash rate and ASICs and centralization that ASICs were causing potentially. So to see RandomX come in and then have this consolidation of mining pools is a bit problematic. So clearly there's a little more work that needs to be done on a community perspective to inform people. Maybe it's time to switch these pools, because the more pool consolidation there is, the higher the risk of a 51% attack. Not that it's easy to do, but it's definitely increased risk. Looking at the price charts, I always like to look at the long-short ratio on Bitfinex if there's one available. I like to look at the VPVR volume profile of the visible range, these horizontal bars on the side here. Normal volume per day, an oscillator, which is RSI. Just looking for extremes or looking for bearish divergences, bullish divergences, anything to suggest price reversal. That's what I'm looking for. And then I look at the 50 and the 200 EMA. 50 is the green, 200 is the red. And when it's bullishly crossed, green is over red. And when it's bearishly crossed, red is over green. And when it's about to flip, that's usually when there's a trend shift. So coupling all this stuff together, looking at this pitchfork too, you can see since 2017, it's been in this downtrend, and it's been in both extremes. It's been in the support case, it's been in the resistance case in this channel. Now it's been maybe 2 weeks above this pitchfork at this point. Odds are pretty good that the pitchfork is now invalidated from the bearish perspective, which is good if you're a bull and you think this is going to go up. From the EMA perspective, green is about to cross over red, so it's about to have a golden cross. And from a VPVR perspective, you can see a huge zone of consolidation here from the volume profile. A lot of volume at this price from 35 to 55, and it's above that now. So the next zone of resistance sits at the overhead consolidation point, which is essentially just 100 flat, which is a psychological resistance as well, just meaning that switching from 2 numbers in front of the decimal to 3 numbers in front of the decimal is a logical leap for some people when trading. So they'll have a lot of stops around 99.99 or something like that, or a lot of asks around 99.99. And this zone, I have this horizontal line here, just the key zone. Since October 2018, it hasn't really been above, I think this is like 85 or something like that for an extended period of time. So if it can get, again, it can get above 85, it can consolidate in the previous consolidation zone and stay there, the golden cross above the pitchfork clearly. So all these things are bullish. Definitely looks very bullish. Shorts and longs, I don't think are too impactful in general for Monero, especially in Bitfinex. You can see that since 2018, there haven't been really any short interest at all. Long interest has certainly waned over the past 6 months. So there's nothing alarming here. There's no like extremes, like massive longs at the top like there was here. There isn't some massive closing of shorts at the bottom. Like there's nothing really to pay attention to that's actionable for me here, which is good. Again, if you're long, there's no like massive long interest right now opening to create like a crowded trade. Looking at the cloud on the daily, you want it above the cloud. Cloud is green. TK cross is bullish. And if you're purely playing cloud signals, you're looking at all 4. You're looking at price above cloud, bullish TK cross, and this lagging span, which is just price 30 periods back. You want that to be above the cloud, above the price. Right now it's in the cloud, above the price. So it says wait a bit until it's above the cloud, above the price. Similar to this area here, you can see there was this horizontal resistance, broke above and off it went. Make it the same sort of thing here. It's in the same zone, same price area. It hasn't been above the cloud since mid-2019. And lastly, looking at XMRBTC, even more striking is a 600-day downtrend where price wasn't even close to being above the cloud. Rejected at the 200 once since April 2019, and now it's back at the 200 again. It is above the cloud. It's going to take some time to figure itself out here. Ranging sideways is much better from a bullish perspective than a bearish perspective, especially if it's above the cloud, especially if EMAs are flattening out and about to twist in a few weeks, maybe even a week, depending how much of this overhead resistance on VPVR is an issue. It's going to be a massive issue at this 0.01, again, another psychological level, where historically there's been a lot of volume interest. It is really great to see this really nice capitulation wick, which is what this is. Now, this is a Poloniex chart, so it could have been poor book liquidity, whatever, doesn't matter. There was a massive sell down here. You get this nice wick. This is clearly somebody